All right, for all of you still joining, we'll give it about 30 more seconds and then we'll hand it off to our presenters. We have a lot of information to cover today. All right, looks like the attendees has kind of slowed down a bit, so let's go ahead and get started. Before I hand it over to our presenters today, we do have just a few announcements. As a reminder, this is not for CPE credit. This is strictly just for informational purposes. If you do have any questions, please feel free to use the Q&A box located on the menu bar, or you can use the chat feature. We may not get to your question right away, but we will get to it. So we're gonna go ahead and hand this off to Scott and Art and get started. Go ahead there, guys.
Well, thank you, Amy. Good morning, ladies and gentlemen. Scott, how are you doing?
Hanging in there. Yeah, it's still busy, but we're still managing. How about you?
Yeah. Been a quiet week, right?
Yeah, getting lots of sleep.
Oh my goodness. I mean, we last met on April 1st and it's been whirlwind. We have a PPP program that's rolled out, and we have guidance from the SBA, and we're going to cover all of that today, ladies and gentlemen. So let me get right to the material and right to telling you who's on this call. We have people with the top information. So my name is Art Wiederman. I'm a partner at HMWC CPAs and Business Advisors. We're in Tustin, California. And my co-host is Scott Haberman, who's a senior tax manager at Eide Bailly. Our CPA firm, HMWC, will be merging with Eide Bailly in a little over a month, and we're very excited about that. We have with us Dan Bywater, who has been incredibly helpful to us in these webinars and to me in giving information. Dan is a non-bank SBA lender through his company, Ready Capital. And he's going to give us some updates and insight into the banking part of all this and the financial, how do we get the loans? We have Michael Graham, who's the Senior Vice President of the American Dental Association, Government and Public Affairs, and his partner in crime, Megan Mortimer, who is the Congressional Lobbyist for the American Dental Association. Without these two folks, I don't know where we would be. I mean, they're giving us the most updated knowledge on all of this that we have today. So what we're going to do is I'm going to do a brief summary of, for those of you, there's some of you that have been living this like we have for the last 2 weeks, but there are some of you out there who maybe aren't really 100% familiar with the EIDL and the PPP loan programs, which is what we're talking about. This is the government loan programs and guidance of the government loan programs that are going to get money into the hands of small business owners to help them through this crisis. So we're going to do a quick summary of that. And then I'm going to kind of hand it over to the panel to make some comments about what's the updated information. We're going to walk you through the calculation of the PPP for those of you who have not filed your applications. We're going to walk you through an example of how it works, and we have a spreadsheet to show you that. And we're going to give you all the most recent updates. And there are updates. I mean, Scott emailed me an update about an hour and a half ago regarding the $10,000 grants. And then Scott's going to jump into the 2 other programs that came in through the CARES Act, the payroll tax deferrals and the employee retention credit. So let's go, Amy, to the slide and just kind of walk through the differences. I'll take maybe 5 or 10 minutes at the most to do this. So the first program that came out when this pandemic hit around the 15th or 16th, this is a program that's been out there for years and years. It's called the EIDL program, the Emergency Injury Disaster Loan Program, for small businesses up to 500 employees. You apply for that directly through the SBA's website, www.sba.gov, and you can see the link down there to it. It'll get you right to a streamlined application. And you can use the funds for business expenses, pretty much, things that are not covered under the PPP. What can you not use the funds for? You can't use it to buy equipment, expand your facilities, refinancing your debt. And again, there's a lot of information there. The limit's $2 million. They're offering up to, and I repeat, not exactly 10, up to 10,000. And we're going to talk about, that's the update that Scott gave me a little earlier. If you get this loan, the loan term is 30 years, 3.75%, no prepayment penalties, and no fees. Okay. And can we go to the next slide? I think there's some more stuff. No collateral on this. The payment deferral, you don't have to make a payment for a year. There's the $10,000 advance we'll talk about. But anyway, these loans are available through the end of the year. So Amy, can you go back to the first slide, please? Now, the Paycheck Protection Program is the second program, and this is the one that's going to be done through banks, not through the SBA. So you're going to go to, and this is where Dan's going to talk about it. It's again for businesses under 500 employees. It's a SBA 7A, a preferred SBA lender through the lender. There's about 1,800 lenders. We're going to talk about that out there. Again, Dan, through his company, is one of those, and he's got, he's been living this, thousands of applications. You can use these funds for 4 things, basically: payroll costs, mortgage interest, and other debt interest, rent, and utilities. And if you had an EIDL loan that you received before the 3rd of April, you would refinance that into the PPP loan. You have to use 75% of the loan proceeds for payroll costs. And basically you have to have pretty much the same number of employees on June 30th as you had, previously. Again, you cannot, if you want forgiveness of this loan, you can't use the money for anything other than those 4 expense categories. We're going to walk through the calculation of it in a little bit. Anything that is not forgiven by the bank and by the SBA, you will have to pay off in over 2 years at 1%. That's cheap money, folks. But the idea of the PPP loan is to provide funds for business owners to put people back to work as soon as possible. And again, we're going to dive deep into this here. I just want to give everybody the overview. Amy, can you go to the next slide? Again, no collateral. If you end up having to not have all the amounts forgiven, there's no payments for 6 months. And the basic concept of the PPP loan is that within the 8-week period from the date that the loan is initiated, and we're going to dive right into that here shortly, anything, as long as you use the money for the costs that are intended by the statute, you should have most, if not all, of the loan amount forgiven by the federal government, and it is not taxable income. So, all right, with that overview given, let's kind of get into the panel here, and let's talk about kind of what has happened and where we are. So, Michael and Megan, let's start off with what have you guys been? You guys have been kind of hanging out and not doing a whole lot in the last week, right?
Well, this is Mike Graham, and let me start off, Art, by thanking you for inviting us on, and because it's so important that we reach out to as many dentists as we possibly can to explain the complexity of what's going on right now. But I honestly, if we did not have the relationship that we enjoy with these accountants, especially those who are members of the Academy of Dental CPAs, we would be in a completely different place. It's been a great team effort. And the ADA is working not just on these issues, but all issues that surround the dental practice. What's happening now, what's going to happen a week from now, a month, 2 months, a year from now. So we're involved in all of this, and things are changing. We'll discuss a lot of that, I know, today. But things are changing with the EIDL loan, and things seem to be changing every day with the 7A PPP loans. So it's important that you listen to what's happening today, but also be vigilant on so many other messages that you'll probably receive over the next few days and weeks. But I'm going to turn it over to Megan right now, who is really our expert at the ADA on what's happening on Capitol Hill and with the loans. So thank you, Art.
Thank you, Michael. Thank you. My goodness. I don't know how we would have gotten through the last 2 weeks without the two of you. You've been absolutely unbelievable. Thank you so much. Okay,
Yeah,
Megan.
I'll just piggyback on what Mike was talking about and kind of give a lay of the land legislatively right now. So, Families First passed March 18th, CARES Act passed March 27th. They implemented it at light speed, and that's why we're seeing a lot of these problems. We've heard a lot from the administration and congressional members about wanting to do an additional infusion of $250 billion into just the PPP program. The Senate put forth, the Republicans in the Senate put forth that proposal yesterday, and then the Senate Democrats came back and said no, they want more than $250 billion, and just blocked that vote that was going to occur today on the $250 billion for infusion into the PPP program. So we will need to see if they're able to negotiate some sort of package that they can all coalesce around, mostly because they don't want to have to come back into town in order to vote on this. They can do something procedurally called unanimous consent, where they don't have to physically be present in order for legislation to move forward. But that is contingent upon everybody, and I mean everybody in Congress agreeing to that. And there are still a few members that feel that a quorum, which means physical presence, needs to be there. This is all very inside the Beltway speak, just to say that unfortunately we're seeing some political posturing occurring, and we'll have to keep an eye out to see when that actual bill for an infusion of cash into the PPP program happens.
Right, and Megan, so that's interesting. I read this morning on the internet that there have been approximately 275,000 applications and about $75 billion approved. Are you hearing any numbers as far as what is out there and what has been approved? I mean, we're just like 3 or 4 days into this, and maybe Dan, you might have some insight into this too.
Well, the last official document we got was from a senator requesting more funds from advice that he'd gotten from the SBA, saying that it was around 60 billion and around that same applications. But that again was yesterday. So the numbers that you're hearing is probably coming from reputable sources as well.
Right. And I'm seeing Dan, I mean, this, a lot of the banks some of the banks are still not even online yet.
Yeah. I mean, there's a wide variety of issues right now. You got some banks that are putting up requirements that you have to have either a business loan or business checking or some type of relationship with them before they even look at a PPP loan for them. There's others that have actually, frankly, just said they don't want to do them. Then you have others that are taking the application. So there's a wide variety of wide variety of responses from these banks so far.
I know. Okay, so Megan, did you have anything else before we go into show the doctors some of the calculations that we've got going on here and how they're figuring it, maybe answering some of these questions? Is that your update for the moment?
Yeah, that'll be my update, but I'm sure Mike and I will have questions and we'll be happy to answer them as they come in.
Sounds good. Okay, Amy, let's go to the next slide. Okay, so basically, folks, here's how this is going to work. So when you go to the bank, you go to Dan, you go to whomever you go to, more than likely what's going to happen is, and by the way, I'm going to tell you, don't print out the form. The form is Form 2483. It's SBA Form 2483. You can find it if you want to look at it on treasury.gov. On treasury.gov, there's a link on the top, a skinny link at the top of the main web page that links you to the coronavirus information. It's got all the updates and all the guidance, and it's got the form. So what's going to happen is don't print out the form and fill it out and walk into your local bank and hand it to somebody. That's probably, Dan, not how it works. It's all done online, right?
Some people are taking paper applications, actually. Ready Capital,
really?
We have an online portal that we have people are doing it electronically, but there's some of the smaller community banks, they're just taking paper applications.
Yeah. So basically what you're going to do you need to call your bank, and you want to you want to apply generally with the bank that you bank with. We're going to talk about what happened a little later with Wells Fargo, which is public knowledge, and Wells Fargo is not taking new applications to the best of my knowledge, which is a lot of our doctors. So we'll talk about that in a little bit, but most all of the other banks, to my knowledge, are involved in this. So what you're going to do is you're going to go online and you're going to see the application. And on the application, under the address, there's basically three numbers that you have to put in. Three numbers. The first number is going to be the calculation of your payroll costs, because the calculation of this loan amount is based on payroll costs. And there have been all kinds of questions and issues. So we're gonna smooth this out for you right now as to how this works. So Dr. Arthur Wiederman is a private practice dentist who operates his practice. I have an S corporation. I own 100%. Now there are partnerships, there are sole proprietors, single member LLCs. We'll chat about those in a minute. So what's going to happen is that the first number that you're going to need to gather, you're going to need to end up with your annual payroll costs. So the way you get this is you start off, and you'll have this this PowerPoint will be available, and the calculator that we'll show you in a second will be available. But you're going to take line 5 of the Form W-3, which is your, generally, this is what I've been telling clients, and Scott, please jump in if you have different information. Line 5 of the Form W-3 is going to be your total wages. Don't use line 1, because if you have a 401k plan, that's going to be reduced by the amount that you've withheld from all of your employees, and that is not the correct number. It'll actually give you a lower number. And if you have a Form 940, which is your federal unemployment form, for those of you doctors who have flexible spending accounts, cafeteria plans, the Form 940 is the real true payroll cost that you have. So that's the number you start off. So let's say that's $600,000. Now, I'm an S corporation. I own 100%. My salary for the year is $160,000. And under the law, as Scott and I know by doing lots and lots of dentist tax returns, we have to include in that $160,000, we have to add the self-employed health insurance that we pay in order to deduct it. And I'm not going to go through that. So my real salary is $145,000, and I added $15,000 to it. It's $160,000. Okay, so that's my salary. Then I paid $10,000 for health insurance for my employees. So when you go to calculate that number, ladies and gentlemen, what you're going to do is you're going to don't look at the total check that you wrote to your insurance company. You have to reduce that amount by anything that has been withheld from your employee salary. So let's say, for example, you're paying Blue Cross $2,000 a month. And of that, $1,200 a month is being taken out of your employees' salaries. Your personal practice, Dr. Wiederman's out-of-pocket costs are $800 a month or $9,600 a year. That's the number, not the $24,000, but the $9,600. That's the amount that you can add to payroll costs. The guidance that we received from the SBA on April 6th indicated that we can go ahead and include. And let me take a step back. The amount of compensation that's included in these wages, and you'll see this on the spreadsheet, is only the amount that is $100,000 or less. So as you'll see, Dr. Wiederman is going to have to reduce his the payroll that he figures to get the loan by the amount to get him down to $100,000. But we found out in the SBA's guidance that was put out on April 6th, on their frequently asked questions, which is on the website at sba.gov, that the $100,000 does not include doctors' health insurance, nor does it include doctors' retirement plan contribution. So we can include in the cost of payroll the $50,000 that Dr. Wiederman contributed to his qualified retirement plan. We can also add the state employer payroll taxes, not the federal taxes, but the state taxes. And let's say that's $5,000. So let's go to the next slide, please, Amy. All right, so here's the calculation. And the bottom number, to cut to the bottom number, that is the amount of the loan that you are going to ask Dan or the bank or somebody for. So we start off with the W-3 wages of $600,000. We're going to take out $60,000, which is the amount that Dr. Wiederman's salary is over 100. But remember, that includes his health insurance, so I can add back 15,000. I'm going to add the retirement plan contribution for the practice. I'm going to add the $5,000 for state employer payroll taxes and $10,000 that we ended up paying for the dental team. So the total payroll costs, and that is the number what's going to go in the box for payroll costs, is $620,000. Okay, and you're going to actually, I'm sorry, you're going to divide that number by 12. So the number that's going to go in that box is actually $51,667. Then in the next box to the right, you're going to multiply that by 2.5, and the amount of the loan that you are going to be asking for is $129,167. So this guidance has taken a couple of weeks to get to this point that we believe we have the information. So Amy, if you would be so kind as to go to the spreadsheet. Okay, so the spreadsheet, and this is on our website, the HMWC website, that you can link to. So there's the spreadsheet, and it adds up, and I did it myself, and it works. So there's your payroll cost of 600. We're going to subtract on line 2 the excess compensation of 60. We're going to add the group health. Now I combined on the spreadsheet the $10,000 for the employees and the $15,000 for Dr. Wiederman. We're going to add the retirement benefits and the state taxes. So there's your total of $620,000. And the average monthly expenses are $51,667. And we multiply that by 2.5 times, and that's $129,000. So here's what's going to happen. You're going to send Dan an application, or you're going to send your bank the application. Then they get the application. Dan says, yep, here's your loan. Here's $129,000. That money from, and again, we're going to get into this in a second, from the time that the loan is made, you have 8 weeks to spend that money on the 4 covered costs that we talked about, which is payroll costs, utilities, rent, and interest on loans before February the 15th. So if you do spend that money on these 4 things and you keep meticulous, let me say again, ladies and gentlemen, meticulous records of how this money is spent, then you will, down the road, after the 8 weeks is over, you're going to call your bank, you're going to call Dan, you're going to say, hey, Dan, bank, by the way, I heard that I don't have to pay this loan back. So here's all my calculations. The SBA, and Megan, I don't think the SBA has issued any guidance on the forgiveness part yet, really. Have they?
Nothing official, no. I mean, we're seeing Q&As and we're seeing things from Treasury that are coming out on the forgiveness, but the lenders are still waiting for a lot more additional guidance on that.
Right. So don't worry, folks, about the forgiveness part. So kind of 35,000 foot view, there's 3 pieces to this PPP. Step 1 is applying and getting approved. Step 2 is how do we use the money and how do we spend the money? And step 3 is how do we get it forgiven? I will encourage all of you. I have gotten, Scott, I'm guessing you've gotten a lot of questions on, all right, so how do I do this? Can I pay an employee retention bonus? Can we take the money and throw it over our left shoulder and get it forgiven? We're not there yet. We don't have the tools or the guidance from the Treasury and the SBA to say, this is exactly how the forgiveness is going to be calculated. And these are all the things that we have to deal with. Okay.
Right.
So
right. Yeah. What I've seen so far, and some of my recommended guidance is open up another bank account with an institution that you're getting that loan from, just so you can track the use of those funds to the penny, and you're not commingling bank accounts with, say, your operations account or something else out there. That's what I've been recommending, so you have more flawless records for the bank to be able to look back upon and say, okay, well, this ties out, so we're good. Forgiveness is awarded for this loan, and we can move on down the road. What they're going to need is, from what I've heard, is contracts for your rent, utility invoices, and so forth. Essentially, documenting what did you use those funds for? But if you're trying to pay an advance salary for the next 6 months, I mean, who knows what they're going to come back with, especially with the guidance they keep on releasing each day. And so we're having to react after they issue guidance, each evening. So you're correct, Art. You got to stay tuned, and we don't know every detail yet.
No, we don't. That's great. That's a great comment, Scott. And I want to make another comment here. I'm going to start this by saying, is there in no way, shape, or form am I giving any legal advice here. But I called one of my best friends, my golfing buddy is one of the best labor attorneys I know in Southern California. And I said, so are there any issues? I said, I'm giving a webinar to a lot of people tomorrow morning. Are there any issues that I need to mention? And his only comment was that when you start, if you have laid people off and you start hiring them back, and they have a contract or you have an agreement, you really need to check with a labor attorney, a labor attorney who understands the laws of your state. We have this because of our partnership here with Eide Bailly and our clients who are in many states. There are lots of people in lots of different states that are listening to this broadcast. So every state law is different. So before you start hiring people back or saying, well, because here's an issue we're going to have, folks. You're going to get this $129,000. You have to pay at least 75% of that money for payroll costs in order to get the forgiveness. Well, you could, I believe, and Scott and Megan, correct me if I'm wrong, you could choose to use the whole $129,000 for payroll costs and pay no rent, right? Or you could choose to use 75.1% for payroll costs. So we have someone who's on a contract with us. We have an associate. We have a hygienist. How do we determine how they're going to get paid? Well, again, better to be safe than sorry. So before you start bringing people back and having conversations about how much money you're going to pay everybody with this over the 8-week period, I would strongly encourage all of you to have conversation with a licensed attorney who specializes in labor law. And that's as far as I'm going on legal advice, which that's not even legal advice. Okay, so let's go to the next slide, Amy, please. All right, so here's the updates, and this is where I want everybody to be jumping in and talking. So one of the biggest issue and the biggest question that we had in all of our meetings and conversations is, would the banks and financial institutions allow us to hang on to this money, this PPP money, until our dental office is open? Because the fact of the matter is, in most states, 99% of the dental offices are closed. They're not open except for maybe emergencies. So the doctors are saying, wait a minute, the Congress has got this going. We got the money funding. We're seeing approvals. Megan, I think one of you guys said that you saw one doctor got their money, or Scott, I think you said one doctor actually got their PPP money, right?
Correct. Yeah, within our Colorado office, we have a couple clients that received their funds so far.
So Dan, realistically, how soon do you think that we're going to have approvals and money flowing? Do you have any idea?
As far as our online portal, once we got guidance on Friday of last week, we spent the whole weekend putting together the online portal, getting it ready to go. We opened it up on Monday. And within 2.5 days, we got 5,000 applications. We have taken our whole staff of about 200 people and repurposed them into processors. So we've got sales guys like me. We've got different people actually processing loans. So we're hoping we're going to get to a point where we're doing about 500 to 750 a day. I actually saw over the last day or so, we've done about 1,000 PLP numbers that were issued, which means they're essentially approved and we're about to fund them.
So once they're approved, do we have any idea? Today is the 9th of April. If a doctor has gotten an approval, are we talking that the money's going to be in there? 2 questions. Number 1, is the money going to be in their bank account 3 days, a week, 10 days, 2 weeks? And number 2, and again, I know you can only speak for you, Dan, but are you going to distribute 100% of the loan proceeds at the beginning, or how is this going to work?
Yeah, good question. So for us, typically once we actually approve the application and we get a clear to fund at that point, it's usually, it depends on the time of the day. It's a wire that goes out. So if it's earlier in the day, you could get the funds that day, could be the next day. So I would say 24, 48 hours, you would get the funds after clear to close. And then at that point, yeah, you're going to get the whole amount. You're not going to get disbursements over a certain period of time. You're going to get the full amount. So like Scott was saying, and I just want to reiterate this, bankers love things that look clean. So if you can get a account set up to receive those funds, that way it's really easy for the banks to see that the funds were pulled out of one account, used for certain things. It's just going to make your life a lot easier. Again, we don't have guidance of what the forgiveness is going to look like. We only have maybe 3 or 4 bullet points to go off of, but keeping it clean is always a great rule of thumb with bankers.
And Art, just so you are reminded, I know we circulated this, but Treasury did put out, part of their Q&A saying that once the loan is approved, the lender does have to distribute those funds within 10 days. So we can't just delay forever. There were some banks saying, oh, we may be able to delay for you, so you can wait until you're closer and ready to your practice. Once that loan's approved, they have 10 days to get it to you for a number of reasons. One, they want to get it to people within 10 days if they want it, and also because they don't want people holding on to these loans until they decide they want to take them on.
And Megan, this is a big part of what our webinar is about today, this particular item. And that's what the slide up here right now is. So we did not know until yesterday at about 11 a.m. So SBA had put out questions and answers. They put out 18 questions and answers on April 6th, which was Monday. Yesterday, Wednesday, April 8th, about 11 a.m., they added 2 questions. One had to do with a promissory note and number 19, but question 20 is the big deal. And basically, we now have definitive, absolute, as Megan just said, guidance. So that once the bank approves the loan, they are required to distribute those funds within 10 days. So what's going to happen, folks, is you're going to get, here's the question. I'll just read it right down here. The amount of the forgiveness of a PPP loan depends on the borrower's payroll costs over an 8-week period. When does that begin? And the answer is, it could not be clearer. The 8-week period begins on the date of the lender making the first disbursement of the PPP loan. And here's the underlined part, folks. This is what brings it home. The lender must make the first disbursement of the loan no later than 10 calendar days from the date of loan approval. And I will tell you, I've spoken to several people high up in the large national banks. They are getting this money out in 5 days. They want to get this money to you. So here's the reality. If you have been approved for a PPP loan, you are going to get your money realistically in the next week to 2 weeks at the latest. I would think they have to, once the approval is issued, they have to issue it. And Dan, if a bank or a financial institution decides to do something other than that, aren't there severe ramifications that the powers that be can take against them?
Oh yeah, I'm sure they are. There will be. I mean, each Ready Capital is a preferred lender with the SBA, which gives us a lot of different privileges, allows us to process loans quickly and get them approved. You could be putting your preferred lender license in jeopardy, or at least have some consequences to that. So yeah, every lender is going to follow it. There's no way they're going to not.
Okay, so that's very important, ladies and gentlemen. So the bottom line is, you are going to get, and this is going to be a lot of the conversation that we're going to go through for the rest of this, and then we'll get to some of your questions. We certainly want to be respectful of your time. We might go a little over an hour, but we're not going to go that far over an hour, because I think we'll be able to get to everything. One thing that everybody needs to also know, and if you don't know, you should, and is that, and again, this is not being in any way, shape, or form disrespectful to Wells Fargo Bank, but Wells Fargo Bank announced a few days ago that they are no longer accepting new PPP loan applications. And remember that we've been talking about the fact that you should be applying with your local bank, and also that you should be, and that if you apply with a bank that is not your banking, the bank that you bank with, that it's very likely that you're either going to be put to the back of the line or that they're not going to take your application at all. Now, I know that Senator McConnell is trying to get some legislation to require banks to take people who are not customers, but that may or may not happen. The bottom line is that if you are a Wells Fargo customer, my understanding is that if you put your application in, they will process it. But if you are a Wells Fargo customer and you were going to put your application in today or tomorrow, the next day, you need to look for some different options. Do I have that right, folks? I mean, that's my understanding. So, and we have a lot of doctors who are and again, this is no disrespect. This is just a fact. All right, let's go to the next slide. Okay, you know, and basically we're still waiting for some of this, these nuances of the forgiveness, some more on the calculations. One thing I want to talk about is that sole proprietors and independent contractors are technically not allowed to apply for these loans until tomorrow, April 10th. And that will happen. And then again, for your sole proprietors and your independent contractors, you have to go through the calculation on the spreadsheet. And you know, again, Scott and I and our teams can help you with all of those if you need some help with those calculations. We're not going to be filling these forms out for you, but we can walk you through where do you get the payroll number and all this stuff. Again, as Megan mentioned, a couple days ago, President Trump told Secretary of the Treasury Mnuchin that an additional 250, that should be billion, not million. I'm sorry, $250 billion for the PPP program. They're asking for that. Megan gave us an update that I wasn't aware of. I knew that the Senate was going to try to vote on it today, but apparently the Democrats have shot it down and they're still talking, right? Yeah. Okay.
Yeah.
So, let's do this. I want to have a little bit of a conversation quickly about, now we know that we're going to be getting this money, ladies and gentlemen, before your dental offices open. And if you have, and again, what you've chosen to do with your employees, I would say, Scott, the majority of the doctors that I'm working with have either furloughed or laid off their employees. Is that kind of your understanding with your clients?
Yeah, other than a very bare bones skeleton crew back at the office, everyone's been let go one way or the other.
So here's what this means, and this is the decision. And folks, I want to be very clear. Scott and I are not making a recommendation of exactly this is what you all need to do, because everybody's situation is different. What this guidance that we got from the SBA yesterday does is it pretty much forces your hand. In other words, if you want to take this money now, if you have applied, and remember, Dan, if they've applied and they've been approved, loan documents to take the loan, right?
Yeah, and there's a trigger point where eventually you have to sign it to, you know, allow for the loan to be funded. So
right. So for those of you that have already triggered it, and it's been approved, you're going to get your money in 10 days. For those of you who either have not applied, or for those of you who have applied and you're still waiting, you have a decision to make. So here's your decision. Your decision is, okay, I take the money, I get approved by the bank or whomever, I get approved on the 12th of April. So that means that by the 22nd of April, and your dental office is not going to be open by then, you have to take this money. They're going to give it to you, and you're going to have 8 weeks to spend it if you want it forgiven. So what are your choices? Choice one is you take the money, you start putting your employees back on payroll. What does that do? Pros and cons. The advantage of doing that, ladies and gentlemen, is that your employees are now going to get a paycheck. I don't think Megan and Michael and Dan, I don't think any of the unemployment money has gone out to anybody, the $600 a week yet. I haven't seen it. Has it?
I have some folks in various states that are getting the $600 extra a week on their unemployment. But
They've already got.
That's anecdotal, but yeah, New York,
Oh,
New
yeah.
Yorkers who applied right away. Now
Okay.
there's a backlog, so.
But a lot of them have not. I mean, the unemployment offices are also buried like the SBA. So, okay, so you go to your employees and say, hey, folks, listen, we've been working really hard with the SBA and our accountants and all this stuff, and we now have the ability to put you back to work. Think of the goodwill that that's going to build with your dental team, okay? It's something to think about. Number two, you are never going to have another opportunity to do all the training and getting ready for opening, because folks, life will begin again. This is not over. We're not going to fail. We're going to be opening dental offices again. So what is it that you have an opportunity to do? You have all the training that you've always, you know, your hygiene team says, you know, I'd really like to do some training on, you know, how to talk about, procedures in the 4,000 codes and all the different things that they need to do in the hygiene. We've wanted to do some training on verbal skills. We wanted to do some training on, we wanted to learn sleep apnea procedure. You have an opportunity now, if you put everybody back on payroll as the leader of your team, to start getting your office ready to go and really training. That's a choice. I'm not suggesting that everybody is going to want to do that. The disadvantage of doing that is if you take the money now, you want it to be forgiven, you have to spend it within the 8-week period. And so if we're not open for 8 more weeks and you spend the money and everybody is getting paid and they're not in the office working on dental patients, when you get back and you put them back on payroll, there's no PPP money. This is a choice that you have to make. So your choice is to take the money now. Your other choice is to not take the money now and to say, you know what, I'm going to wait. I'm going to wait and see how this goes, and I'm going to apply in a month, because I believe you have till June 30th to apply, right? So, you know, this is a choice, ladies and gentlemen. If you do that, you know, the advantage of doing that would be if you wait and you get the loan, you're 4 or 8 weeks down the road, and maybe you'll be able to use this money for the purpose of paying your employees when your office is open. But your employees wouldn't be getting paid now, and that would give you some financial relief, but it wouldn't give your employees financial relief. So you see where I'm going with this, is that this guidance is so important that we understand that you have choices and you need to make the choice. And your third choice is to not take the loan at all. So let me open this up for anybody's comments. Scott, Megan, Dan, anybody, Michael, as far as, you know, we are not telling our clients this is what they should do. You absolutely should take the loan now. You should absolutely not. The disadvantage of not doing the loan now is we don't know how long this money is going to last. I mean, Megan indicated to us this morning, well, the Republicans wanted $250 billion. The Democrats want more. They may not come to an agreement for additional money, right? Who knows?
Yeah, I mean, it would be politically not smart for them not to come up with some sort of agreement. But again, that's not a guarantee. And $250 billion can run out really quickly too, as we've seen already being allocated out the door.
Right. So Scott and I do not want to be on the other end of a phone call that says, hey, Art, hey, Scott, you told me to wait. And now the money's gone and I need this money and I can't get it. So it's, again, our job as advisors, Scott and I, our job as advisors and our teams at HMWC and Eide Bailly are to basically give you choices and options and the most up-to-date information for you to make the best decision for your dental practice. So Scott, do you have some comments on that?
Yeah, I think what Dan and I were exchanging emails, I think other couple of folks were included on those a few days ago. I mean, the intent of the program is to get people back on payroll. And so that's what the government wants to do. And so whether that means you pay them a couple of months in advance, I mean, who knows if that's a legitimate tactic that's going to be allowed come forgiveness time, or, you know, however you pay them, that's still up in the air to be finalized. But remember that one of the requirements for forgiveness is having the same amount of employees on payroll at June 30th as you did before this whole disaster started. So that's one of the requirements that you need to remember, that you can't just hire a couple folks and increase their salary substantially. that's just one of the factors of the equation. So keep that in mind when making these decisions.
Absolutely. That's really good advice. Anybody else on these choices that our doctors have?
Yeah, and beyond the loans, as you guys know, tax credits exist as well. So the employee retention tax credit is a different option. And I know that the IRS and other lawmakers are going to be considering additional tax credits and breaks as we move forward with other pieces of legislation. So you guys will have to become experts on those as well.
Okay. Let's go ahead and move on to, Scott's going to go ahead and cover what Megan was talking about. Megan, we didn't practice these segues, did we? You're doing a great job helping me here.
I just think we all know the natural flow of these conversations now, because again, it's how we provide options. But no, I think we just got a rhythm now. You and I just got a rhythm.
So quickly, just going through here in the calculations, going back to the PPP, we talked about the fact that health insurance and retirement included on top of this. If you are paying your employees through a professional employer organization, we call them employee leasing groups. They are counting them as wages, but you need to read the SBA guidance. In calculating the payroll costs, you are allowed to use either calendar 2019 or the prior 12 months. But I suspect, Dan, that if someone starts doing a calculation and they start using April 1 to March 31st, I don't know, maybe you as a lender who's trying to process these thousands of applications might say, I'm going to put that one aside. I got to look at it later. I don't know how this works, but most everybody's using 2019.
Well, yeah, most people are using 2019. I had someone call me actually the other day that, in 2019, they had just a few employees, and now since the beginning of the year, they've hired a few additional. And so I think there's going to be flexibility with lenders and our borrowers to look at, what time frame is going to be best for them. One thing to keep in mind too is these documents that you're going to be signing, you're attesting that as a borrower that they're correct, that the lender is not taking on the responsibility and the liability that they're correct. We're supposed to eyeball it, make sure it looks correct, but we're not. It's not, the onus isn't on us to make sure they are correct. So you're signing a document saying that you have calculated this correctly. We'll help you. We'll give you the tools to do that, but essentially you're going to be signing that you've done this correctly.
And I also want to point out, ladies and gentlemen, that one of the boxes that you're going to have to mark indicates that if you do not use this money for its intended purposes, the government can bring federal fraud charges against you. I don't particularly want to be on the other side of a deposition table or a courtroom when the federal prosecutor is bringing federal fraud charges against me for using this money incorrectly. So this is not for your personal purposes or to pay your home mortgage. This is for what it is intended. In calculating the number of employees to put on the 2483 form, you can either use an average of the immediately preceding 12 months or the average of 2019. Again, we don't have a lot more guidance than that, folks. That's what they told us in the guidance on the 6th. Payments to independent contractors, which originally, I think actually in the statute, it indicated that they would be included as part of our payroll costs. They're not included. The guidance is very clear because independent contractors are going to be able to file their own PPP applications. And again, no reduction from federal payroll taxes and income withholding. All right, so let's go to the next slide. And Scott, I'm going to hand the program over to you, and I'm going to let you talk about the employee retention credit and how that works.
Thanks, Art. Yeah, so what Megan had alluded to a couple of minutes ago, there are a couple of different options that are available under the CARES Act. There are tax provisions, payroll tax provisions. One is the employee retention credit, which essentially is an alternative to the PPP program, where if you're keeping folks on payroll during a down period, such as the one we're currently in, where the government either A, shut you down, or B, your gross receipts are 50% or less of the prior year's same quarter. And so what that credit is, it's a credit essentially of $5,000 per employee. So if you're paying an employee $10,000 for this calendar quarter, Q2 of 2020, the credit is up to 50% of that $10,000. So you're looking at about $5,000 tax credit per employee. And again, that's against payroll taxes. So the employer portion of Social Security, which is a 6.2% assessment on those wages. So that's one of the benefits there with the CARES Act as an alternative to PPP program. And again, we spoke about this last webinar. You cannot do both the PPP program and the employee retention credit. It's either one or the other. So go ahead and hit to the next slide, Amy. So here's some further details, and I think Amy will probably be sending out the slides to all our participants. So these will be good reference points for you guys to look back upon and see if this is a viable alternative to the PPP program. And I put together a calculation. I'm not sure if Amy can show that on the screen right now. It's that Excel document I sent you, Amy, but more times than not,
I don't actually have it. I'm sorry.
Yeah, the PPP program is going to be better than this employee retention credit by quite a bit for a standard dental office, where the employee retention credit might be a more viable alternative than PPP would be for, say, a lot of employees that are lower wage earners. And that's not really the standard dental practices out there, the demographics in that industry. So just keep that in mind as an alternative if you don't get PPP funds, that this is an alternative benefit for you as a business owner to capture some tax credits. So go ahead and go to the next slide. Go ahead and so one of the items that I wanted to touch on was if you're receiving the tax credits for putting folks on leave to take care of their kids, or maybe they're quarantined with coronavirus, or some of those other qualifications that was passed as part of that Family Leave Act a couple weeks ago. You can't double dip. So if you're getting a tax credit for those wages, you can't get the employee retention credit for the same employee. So that's something to note there as well. Go ahead and go to the next slide. So here's an example. So Art's dental practice has 4 employees with a total of $70,000 in wages. Max wages allowed, as I spoke about earlier, were $10,000 per employee for a total of $40,000 since you have 4 employees. So times that 50%, you're looking at a potential $20,000 credit. And the credit is filed on your payroll tax forms that are filed quarterly with the government. And then if it exceeds that amount, you can apply for the refundable employee retention credit, which is filed on a form 7200. So you'll need to work with your CPA and your payroll company, payroll provider, to help get these filed and get your money back in your pocket.
Hey, Scott, before you jump to the payroll tax deferral, I want to get your opinion. So we have a lot of our doctors most of our doctors are using the traditional payroll services that we all know the names of. But we have doctors that are using, for example, QuickBooks Payroll, and they're doing their own quarterly returns. You have some of those?
A handful, definitely.
Okay, so for those of you that are doing that, they're going to have to learn all this stuff, right? I mean, because isn't this going to affect the preparation of payroll tax returns?
Oh yeah, it's going to have a widespread effect, and folks are still getting used to it and how do you implement it within your system. Just like payroll companies out there are trying to figure it out on their side too. I'm assuming there'll probably be some kind of add-in for your QuickBooks software. I mean, who knows what's going to come out, but it's still pretty up in the air about how most vendors are going to change and adapt to the new requirements.
The only reason that I bring that up, Scott and ladies and gentlemen, is that if you are doing your own quarterly returns and you are going to apply for this payroll retention credit, my advice would probably be this might be an opportunity for you to turn this over to a payroll service that does this and has all their software dialed in, instead of you trying to figure it out and how do I do this and what box do I fill in. That may not be the highest and best use of your time, but that's certainly your decision. That's the advice I'm giving to some of my clients. We don't have too many, but and again, most people are going to apply for the PPP. All right, Scott, payroll tax deferral.
Yeah, the last one, and this is pretty brief. So whatever payroll taxes you have left after claiming the credit, you can defer for half of it 1 year and half of it for 2 years. So any payroll taxes that are owed at the end of 2020, you can defer 50% of it to be paid December 31st of 2021, and the other 50% to December 31st, 2022. So it's a pretty great deferral, but as Art and I were talking about the other day, how's your payroll company going to keep track of that? So that's something to be aware of. Just making sure that you get those paid on time, because as everyone knows on this webinar, the one tax you don't want to avoid or not pay attention to is payroll tax. So that's something to be aware of. One question that I had from a client the other day was, well, can I do this payroll tax deferral and this employee retention credit until I get the PPP funds? Well, yes, it doesn't preclude you, but who knows what the whiplash effect's going to be once you get those PPP funds? Do you have to pay all those deferred payroll taxes back immediately? Do you have to pay back those employee tax credit refunds that you received? It's still up in the air. It doesn't preclude you from taking those PPP funds, but we don't have the guidance to make a determination of how they interact at this point in time.
And again, remember, you're allowed to pay this back half by the end of 2021 and half by the end of 2022. I can't remember, Scott, what I had for breakfast this morning. No less 2 years ago, how much money did I defer? And oh my goodness, wait a minute, you're telling me I have to pay another $27,000 in payroll? I don't have that money now. So there's a lot of that involved also. All right, let's do this, guys. Let's go to the questions and answer. Let's go to questions. So, Amy, do you want to? Let's see.
Hey, before we dig in, I wanted to make a comment. I've got this question over the last week of people being confused. Can they do EIDL and PPP? I think there's been a lot of conflicting information out there on the internet about, no, you can't do both of them. But yes, you can do both the EIDL loan and the PPP program. You just can't use it for the same purpose. So you can't double dip the funds within the same buckets. So I just want to make that comment out there.
Okay.
We'll probably get more guidance on that too.
I completely forgot the thing you emailed me this morning about the $10,000 grant. Why don't you share that with the audience?
Sure. So as most of the listeners probably heard, there's this $10,000 advanced grant for that EIDL program. So once you signed up on the website, took 10-15 minutes to fill out the application, you were supposed to receive the $10,000 within 3 business days. Well, we just found out yesterday that the $10,000 is actually going to be $1,000 per your number of employees, up to $10,000. So if you have 4 employees in your office, you're looking at a $4,000 advance. How they get that information, I'm not sure if you filled out your number of employees on the SBA application. I don't think so.
Yeah.
But that was a little bit of a surprise when I read that.
Yeah, Mike emailed me that this morning. How do they know how many employees? And I didn't have a chance to look at the application. I think you put it on there. I don't remember. All right, let's get to our questions. First question, I think we've pretty much answered, which is the 10-day period and when do you take the money and when our staff is already on unemployment. Yeah, folks, if you get the loan and you have applied for the loan and you're approved and you accept it and you sign for it, by law, the bank is required to give you that money in 10 days and the 8-week period starts. There's no, folks, there's no doubt about that anymore. For EIDL, is it true that you can't have more than 150% of the loan you're requesting in your personal bank account? I don't know if there's any guidance, but I would strongly urge you to not put any of this money in your personal bank account. Absolutely not. None of this money is intended for personal. It needs to go into a business account and to be used for business purposes pursuant to the statutes.
I think the question's actually asking, so say Art Wiederman has $100,000 in his personal bank account already. Are you limited to the amount of EIDL that you can receive?
Oh, no. I mean, well, okay. So the theory of these loans is that you are attesting to the fact that that this whole COVID-19 has created a serious enough financial situation for your business that you have to apply for these loans. And again, we have a lot of businesses that are very, very successful and making tons of money in this horrible time who are applying for these loans. And they shouldn't be. And there's been articles about that. But if you have money in your personal bank account, I don't think that there's anything, Scott, that says if I have personal savings, I can't, I mean, you know, I don't think the government is saying, well, we're not going to give you these loans. Use up, clean out your personal savings. Is that kind of what you're thinking there?
Yeah, I haven't seen any guidance released about what amount you're going to be given based upon your personal wealth. Dan might have some other insight there, but I haven't seen anything.
No, I haven't seen anything either. Okay, for the forgiveness part, does contribution to retirement for employees and sole proprietor count towards the 75%? I would think that it would, because they are including that in payroll costs. But again, we are waiting for guidance. Folks, we've gotten tons of questions about the forgiveness part. And I am having to say, I think so, but I'm not sure. Once the SBA gives the guidance to the banks and to we CPAs and to all of you that says these are the regulations, these are the rules of the road to calculate the forgiveness, we can give you more of those questions. We're not there yet. Just make sure that if you get this money in the next week or two, you're spending it on the 4 categories that are in the statute. Payroll costs, and again, I believe that is correct. And as far as retirement plan contributions, Scott, you know, the doctors have until July 15th to file their tax returns, and I mean their personal returns, but they have until September or October 15th. So if you have the ability to wait to see what the regulations say to fund retirement, that might be something to think about. What about a new practice acquisition that occurred in early March 2020 with no payroll history? You have to have been in business as of February the 15th in order to be eligible for this. So this occurred in early March of 2020. Yes, there are, and I don't have them off the top of my head, but there are specific rules of how you calculate your payroll, and they're in the SBA guidance. But yes, they are. They're on the SBA's website. But you have to have been in business by February the 15th. Let's see. We have not laid off any employees. We're working on emergencies with front desk and assistants, working reduced hours and hygienist vacation days keep on payroll. Once we get the loans, do we pay the hygienist average? See, this is a great question too. I see who asked the question, and I better come up with the right answer as one of our clients. So basically, this is going to be an issue that we're going to have to talk about, is how do we pay them? We don't have any guidance. So you're going to get $130,000. And I had this conversation with my labor attorney friend last night, and his comment was, again, if you have a contract with somebody to contractually pay them, and and they're not working for you, and now they're working for you, you have to see if you can alter that contract, and it's a legal question. But I suspect, and Scott, please chime in what you think, once we get the loan, what we're going to have to do is, number one, we're going to have to decide, are we going to pay 75% of the loan proceeds for wages? Are we going to pay 100%? Are we going to pay 87%? I mean, that's a decision that we're all going to have to be talking about, is how much of this money are we going to use? If we want the forgiveness, we know that we have to pay at least 75%. I had a couple of doctor clients. Go ahead.
Yeah, within those 8 weeks. There's nothing wrong with holding on to the funds and having it turn into a 2-year bridge loan too.
That's right.
I don't think that's a bad option at all. Obviously, it's not the more preferable one, but rather than just paying folks with the loan money to get it forgiven, and they could stay, if they're collecting unemployment benefits and are doing okay, then maybe they stay at home until the time being, and then it turns into a bridge loan. So you got a lot of options out there.
And that these are the options that we can't sit here on this webinar in front of all these people and say, this is what you should do, because every practice is different and it's your ultimate decisions. But yeah, I mean, we don't have specific guidance, but I suspect that you will have to sit down with a spreadsheet, figure out how much of this money we're going to use for payroll. Maybe we're going to choose to pay our rent. Maybe we're going to choose to use all of it for our employees, which is fine. And that $129,000 divided by 8 weeks, is about $15,000 a week. And then of that $15,000 a week, we go through employee by employee and figure out what were they making before and what can we do. Here's another thing, doctors, you're going to have to decide. You may decide. I had a client last night who said, I am absolutely using this money 100% for my employees. And if this doesn't cover everything they were making before they left, I'm going to supplement it for my savings because I'm going to make sure that my employees have full salary for as long as I can do this. Again, it's a choice that you make. So if you decide to do that, say your salaries are $150,000 for the 8-week period that you would have paid people and you got 129. Well, are you going to supplement the 21? Do you divvy up the difference and say, okay, guys, based on this, I've got 129,000 and I'm going to pay everybody 85.8% of what they were making before this happened? Again, we don't have any guidance, but I suspect that's what we're going to have to decide. So, okay, if I'm an associate for a group practice and I get paid as an independent contractor, should I apply for the PPP loan, even though I have no real overhead? Well, I can't advise you whether you should apply for unemployment because that's a labor question. But yes, you can apply, and your wages would be, your income would either be your net income from self-employment, which is on your Schedule C, up to $100,000, or your W-2 wages if you're a corporation. So yes, that's the whole idea, is they are not including independent contractor income in the payroll calculation for the doctors who are business owners, because they're saying that the independent contractors can apply on their own. For PPP, state of California, does SUTA include unemployment, employee training tax? Yeah, the doctor's question is, what does California include? It's the first two, SUTA, S-U-T-A, state unemployment, and employee training tax. Federal with disability insurance and California tax withheld comes out of the employee's salaries as included in gross wages, so that's not included. If a doctor's salary is over 100,000, can he be paid his normal monthly pay, or can he only be paid the average? Waiting for guidance on that, but I suspect that it would probably be the average. I don't think that the government's going to be real thrilled if you take the $129,000 and pay yourself $100,000 of salary off the top. Scott, I don't think that's what the intention of the law is.
Yeah, again,
you don't know.
You got to have the employees too at the end of the time period. For
right. So that, yeah. So yeah. Oh, okay. And in fact, my partner also, see, this thing is changing by the minute. My partner, Pam Chamberlain, my dear friend Pam, texted me as we were sitting here saying Wells Fargo portal is open. And I just saw that. And then someone else is saying, so I guess the Wells Fargo PPP portal is now open again.
Yeah, they eased the restrictions on Wells Fargo so that they could feel comfortable moving forward with more money. But
that's brand new, right?
Yeah, it came out, there was something about it this morning, but we're finally seeing it come to fruition with the online portal coming on. But my dentist in Nevada was saying I'm still like a million in line. So I don't know how long that's going to last either.
And ladies and gentlemen, this is why all of the people on this call have been living this nightmare, because that would be like, you're in your dental office and 4 times in one day, the American Dental Association makes recommendations to change the way you do a crown prep. That's what this is like. This is an analogy to what you guys do for a living. And it's, yeah, I didn't know that Wells Fargo opened their portal. Thank you, Pam. Thank you, listeners. So that's good news, I guess. When the funds are in the bank, go ahead.
Real quick, Art. Megan brings up a great point. Sometimes you think going to the big lenders is the best thing to do, but if they've got 1 million applications,
yes,
you might be waiting a long time. So sometimes going to a smaller lender or community bank, you might be able to get in front of the line much quicker. So just be careful about where you apply and think about that.
It was interesting. The other thing that I heard, one of my clients sent me a letter from a local community bank in the Los Angeles metropolitan area that said, we only have a certain amount of funds allocated. So we are going to give you 75% of the PPP application amount that you apply for so that we can service all of our applicants. Now, I've only heard that from one bank. Number one, I don't know if that's legal. Number two, Megan's looking like I'm crazy, right? But this is the letter. I have to, Megan, I'll send you, when we're done, I'll send you the letter from my client. And that's what they're saying is they're going to give 75%. Again, this is the wild, wild west, folks. It's crazy. So I would ask your bankers when you're doing these calculations, and you got much better shot of getting through to a community banker than you do at somebody at Bank of America, Wells Fargo, Citibank, and no disrespect to them, they're just inundated with tens of thousands of applications. All right, let's keep going here. When the funds are in the bank, what does the employee paycheck actually look like? I use paychecks and all my employees are all direct deposits. So this is another question I asked. My friend, who's the labor attorney, is deep into this for a large nonprofit organization that was just approved for $4.7 million of funding under the PPP. They have hundreds of employees. So I asked him, I said, have you heard anything about, if we set up this separate bank account, how is this going to work? If I have Paychecks or ADP or one of those, pull the money, as long as you can track the money meticulously and you are asking for forgiveness for only the portion that is legally allowed. I mean, because when they pull it, Scott, when they pull the money, they're going to pull the federal taxes, employer and employee, right? That's what they always do.
Yeah, I don't think there's any change with them with the paychecks at all. I think you're just it's like any kind of loan that you're receiving from a lender. Right.
Exactly. What if I'm a sole proprietor and I work at different practices to get paid and I have no payroll? Yes, you can. No, you are absolutely eligible for this. Your net income is your net income from your Schedule C, because sole proprietors and partnerships do not have W-2s. I want to make a point too, Scott, about partnerships. So I have had two banks tell me that they are not allowing you to include $100,000 for the partners in the PPP calculation. Two large banks have told me that. I don't think that's right, but there's nothing in any of the guidance that I've read that talks about partnerships at all. So if you're a partnership or an LLC, now if you're an LLC and the partners are individuals, the individuals aren't getting paychecks. They're getting draws and they're getting a K-1. In my opinion, I think that they should be allowed to apply for $100,000 to add $100,000 for the net income as if they were a sole proprietor. But I've not seen any guidance on that, and that is our opinion. But we've had two banks. I take it back. It was one major bank and one community bank who told the borrower that they could not include that. Now, also, Scott, if we have a partnership of two professional or three professional corporations, I'm telling my clients that they need to apply for a PPP loan for the partnership for the employees, and then they have to file for separate PPP loans for their individual, say, S corporations using their W-2 salaries. Is that kind of what you're thinking?
Yeah, I again, we don't have the guidance, but that's probably our best. That's probably our best action plan right now, especially with guaranteed payments. Those are essentially wages to your partners in a partnership. So if we can't allow that at the practice level, well, we got to go to whoever's holding those guaranteed payments and apply with a bank that way.
Right. Yeah. I mean, and we had one bank. One of those two banks said, "We'll let you have guaranteed payments," which in many cases, because a guaranteed payment by definition is really not your practice income. It's a payment for services. So it should really, in most partnerships, should only be the doctor's, the owner, the partner's health insurance. So anyway, is the last day to qualify for the 100% reimbursement of the PPP funds June 30th? Okay, I've read this statute several times, and please, somebody clear me up on this. It is my understanding that the statute says it is the 8-week period from inception So it does not say that you have to use all the money by June 30th. In other words, if you receive the loan on June 15th, you can, that 8-week period can go past June 30th. Is that your understanding?
Yeah, so you just have to hire everybody up to 75% by June 30th. But
Correct. Yep.
you don't have to spend all the money by June 30th.
That's right. That's my understanding. Is it possible to treat the PPP loan as a 1% loan for 2 years, 2-year term, and use on various business expenses? And not, yes, you can. You can use it for business. That's my understanding. Is that was what Scott, you were talking about that, Scott, is, you know, maybe we don't get the forgiveness. Maybe this is working capital to keep our business going. And maybe this is a, you know, now again, if you spend $150,000 for 2 years, and you have to pay back over 2 years, that could be a financial hardship on your practice. That, again, we have to take a look at that and see what the regulations say. But yes, that is a possibility. Again, it's not required by law that you apply for forgiveness. Let's see, next one. If our tax returns for 2019 are not finalized yet, file for an extension. What alternative can we use to calculate payroll costs for 2019? You don't need to have filed your tax returns. All you need are the payroll tax forms, the W-3 and the 940, which were prepared for you by the end of January. So it doesn't matter whether you filed your tax returns or not. You've got the information to do the calculation. Okay, are we, let's see, where am I going
Hey,
here?
Art, not
Yeah.
to cut you off, but we need to end in about 3 minutes.
Okay. All right, maybe we'll cover one more question. Let's see. Where do we find the money we paid in state employment taxes? They're on your payroll tax forms that you receive from your payroll service. Your CPA can help you identify that. The payroll service can do that. Are we able to pay our office group health insurance? Yes, as a forgivable cost. Employees go back on temporary layoff or furlough and collect unemployment. That's a labor law question. So let's wrap this up and be respectful of everybody's time. Any final comments from anybody? We got to as many of these questions as we can. Anybody? No? Okay, well, ladies and gentlemen, I want to just share.
I think I want to take away is be aware of what's going on. We're getting changes every day. Art and I are finding out new things, and Dan and Megan and everybody out there, you're finding out new things from the SBA, Treasury, by the hour, it seems like. So just stay in contact with your advisors, and just know that there's no solid answers for every question out there. We're waiting on guidance. So just be available for discussions, and you know, stay tuned for some of that exact guidance coming down the road.
And I want to let you know that both for HMWC clients and your Eide Bailly clients, I've gotten some emails from Eide Bailly clients who are listening to my podcast. I'm doing a podcast every week, The Art of Dental Finance and Management. This is all I've been talking about. So, but you know, that's 2 or 3 days behind, and everything changes. It's the problem. Is your advisors are here. We're here for you. Scott and I and our teams are on top of this like nobody's business. So we're here to help you. As I said the last podcast, this is my legacy and Scott's legacy in helping dentists. I've been working with dentists for 35 years, and this is our legacy, to help the dentists get through this. And that's what we're here to do, and that's why we're doing these. So anybody else before we kind of wrap this up? Megan, I know Mike had to jump off. Megan, I can't even begin to thank you and Mike for all the help that you have given to us, the Dental CPA Society, to Eide Bailly, to HMWC, by participating in our podcast, in our webcasts, by giving us information that you are our link to the federal government, and God bless you for all the hard work. And ladies and gentlemen, I want to remind you again, the American Dental Association folks are working their tails off. Remember, there's 160,000 dentists in the United States. And there's, tens and tens of millions of employees in different industries, the airline industry and the steel industry and the hospitality restaurants. So we are, unfortunately, the dental profession is a small piece of the puzzle in the United States economy. And Megan and Mike and the folks at ADA are doing everything they can to advocate for you, and they are working their tails off. Megan, your hair is not gray yet, I can see, but hopefully it won't get there. And again, stay in touch with us. God bless every one of you. We are there with you. We are very sympathetic, empathetic, whatever the words are. Again, my closing comment is my 5 words. Failure is not an option. Take this time, get your office ready. If you decide to take the money and put people back on payroll, if they're not in there, do all the education, call your patients. My goodness, pick up the phone, call your patients. Hey, Mrs. Smith, how are you doing? Are you getting through this? The goodwill that you can create with your patients, if you choose to do this, you will never have this opportunity again. And you'll come out of this and say, my goodness, my dentist called me and asked me how I was. They weren't asking for money. They weren't asking for an appointment. They were asking how I'm doing. So think about what you're going to do, not just getting through this, but what this is going to look like on the other end. To the wonderful folks, Scott, Dan, Megan, Amy, Jessica, all the incredible people at Eide Bailly. I could not have done this. We could not have done this without them. Just thank you